What's up everyone? Welcome to another video. My name is Bernardo and in this video I'm going to talk about how to backtest properly. Okay, so we have to understand that backtesting when it comes to trading is actually very important. So let me use my trading journey as an example of how important backtesting is. See, I was using a trading strategy for 1.5 years. And I decided to start doing prop firm challenges in order to be a funded trader. But after that, I found out that through backtesting, and at that time, I found out how to backtest properly. When I got my strategy into proper backtesting, I found out that it wasn't good enough. So after a while, backtesting 1, 2, 3, 4, even 5 months worth of data, I found out that I had to switch strategies because my backtesting actually brought me to the roots of my trading issue, which was I was basically a break-even trader. I wasn't losing money, but I wasn't making any kind of money at all. So I was basically at a break-even phase, and through backtesting, it really opened my eye to that lack of knowledge or lack of know how to actually approach the markets. Backtesting properly is very important because it helps you validate your trading system. And of course, it also helps you to gain more confidence into your trading. So when you are live trading, you are more confident of what you want to see in the market and what you do not want to see regarding trading setups. So first, we have to understand that if we don't know what we're looking for in the marketplace, or if we do not know what we are not looking for in the marketplace, there's no point in backtesting. Second, and on top of that, if you don't try to make your backtesting conditions as close as your live trading conditions, you're very likely to create bad backtesting data that you can't rely on when you're actually trading. And this means that you're probably wasting your time if you're doing that. So let's jump into the chart so I can show you guys how to backtest properly. And since I'm an ICT trader, I will be using ICT 2022 mentorship model as the model that we're gonna be backtesting, all right? So all the parameters I will be using will be related to that trading model, all right? So let's go. All right, guys, let's go. So first, to backtest ICT properly, we need to easily identify the points of interest in the marketplace, in the charts. If you can't spot those point of interest in the marketplace, you will not create proper backtesting data. Okay, so for that, you need to sharpen your eye. When it comes to ICT, there are some points of interest that we should keep in mind, and we should be able to spot them easily in the marketplace. And those are fair value gaps, order blocks, buy side liquidity, sell side liquidity, market structure shift, and liquidity pools. You may be asking, but how exactly do I sharpen my eye to spot those point of interest easily in the marketplace? So go to your charts, the time frame and the daily bias don't matter in this exercise. So you can look to the raw chart, and basically what you're going to be doing is spotting every zone that you can, every point of interest that you find in the marketplace. You're going to mark out, okay? And you're going to do that until it's very clear for you. So you do that exercise until you can easily spot those zones. So for example, here on Euro USD, let's get this part of the chart. So I can see that on the daily time frame, there was a displacement. All right here. There was a market structure shift right here. It left an order block, a bullish order block right here. It also left a fair value gap, and so on. Here's another fair value gap. Okay, you can of course use any time frame you want, but on the higher time frame, it's going to be easier because you don't have exactly moments where there are low volatility in the market. So if you go to the 5-minute time frame, you're going to see that those zones are not clear when the market is consolidating, when there's not enough volatility in the marketplace. But if you go to the daily time frame, weekly time frame, those are going to be very clear for us. So we can see that on the weekly, there's also an order block right here, bullish order block, and so on. And as you can see, price respected it. Okay. This is the exercise that's going to sharpen your eye for those point of interest. You should do that until you feel very secure on looking for those point of interest in the marketplace. And also keep in mind that through that exercise, you need to be able to correct yourself. Because most of the times when we don't know exactly what those point of interest look like exactly in the chart, we may point out the wrong ones. We may think that um, this is a fair value gap, this is, I don't know, sell-side liquidity, when it's not. So you need to be able to correct yourself. So second, after you master finding those points of interest in the marketplace, you need to master the daily bias. It's very important, guys, that you master finding those point of interest before you try to master the daily bias. Because the daily bias is going to be depending exactly on where the marketplace is located at the moment. So if we are inside of a value gap, we can expect certain behavior into that zone. So for example, here in this weekly bullish order block, so here in this weekly bullish order block example, we know the concept of the order block. We know that this is a bullish order block, and we know that once price comes down here, we should expect a bounce in the price. We should expect an up movement. It's not necessarily going to take up that high, but we should expect some bullishness into this zone right here. But how to master the daily bias properly? So there's an exercise that I want you guys to do, which really helped me define the daily bias. Basically, what you're going to do, you're going to replay the market. Using the market replay, let's see what we could expect right here in this movement. Okay, so price is right here right now. And what I'm going to do is basically find the points of interest in the marketplace so I can use them to actually find out what the daily bias will be. So right now I have everything I need marked out on the chart. Let's break it down. On the weekly time frame, we can see that we have a bullish order block, that one that we mentioned before. If we go down to the daily time frame, we'll see that we also have a bullish order block on that same zone, right? It not only reinforces the idea that price is very likely to reach those zones right here, but also reinforces the idea that once price reaches those zones right here, we may expect a reversal. Okay, so let's see. The exercise is the following. So, as you guys can see on the daily time frame, it created a fair value gap. After that, it left a nut closing candle being validated through this daily candle, and we can expect that the next candle will be bearish. Let's see. All right. So we got into a bearish candle, but right here, there is also an order block here, and we can expect that the next candle may be bullish. All right. So after some bullishness, we can expect two scenarios: that this bearish order block will be tested, or price will go straight down into this zone right here, meaning that, in my opinion, it's very likely that price will just move down into this bullish order block instead of going down. So it means that we'll have a bearish next day. All right. Actually, we created a gap right here, but it only validates the idea that the next candle is very likely to be bearish. Okay, so price is showing a willingness to get into that zone again, so I believe it's very likely that the next day will also be bearish. Okay, we have a bearish day. That's what we were expecting. So that is the exercise that I want you guys to do. So let's see what happens once we get into this weekly bullish order block and daily bullish order block. Okay, so we got into the order block. We had a consecutive down closing candles sequence right here. And now we can expect some bullishness in price. So I'm actually expecting that the next day is very likely to be bullish. All right, we of course have a gap right here, but yeah, this was kind of bullish, pretty much like this is example. But I'm also working with the idea that the next candle will be bullish. All right, we have a bullish candle. We may try to reach this order block, bearish order block that was formed. We'll probably test it. So the next day, I believe it's very likely to be bullish again. All right, I was wrong, and that's fine. But I'm also buying the idea that we'll have a bullish day anytime. So I believe the next candle will be bullish. All right, we have a very nice bullish candle actually testing this order block. Once we get into that order block, it's very likely that the next day will be bearish. Okay, we have a bearish reaction just as we expected. And that's how you train the daily bias. To properly determine the daily bias, we need to take into consideration what is the current market narrative. So in this example that I just showed you guys, what is the current market narrative? So the market has been bullish. If we take a look into the daily time frame and zoom out, we're going to see that from October last year, the market has been bullish on Euro USD. So, okay, once the market is bullish, it means that it will take out old highs and keep old lows. And for that means, I know that the market narrative is bullish. So if the market narrative and context is bullish, I can consider that once we get into a reversal zone with a lot of confluence or on a higher time frame, and for this we need to take into consideration the zones hierarchy in the marketplace, meaning that this weekly bullish order block is most likely to be respected than this daily bearish order block for two reasons. First, because this zone was created on the weekly order block, okay, and this zone was created on the daily order block. So when it comes to hierarchy, this zone is very more likely to be impacting the market than the daily zone of the bearish order block. Plus, we are on a bullish narrative. We are in a bullish scenario. So it's very likely that we will get a reaction here to the upside. We, of course, get a reaction on this bearish order block, but then it will move higher because the market narrative says so. Let's see. The market started moving up as we were expecting because market narrative and market hierarchy is very important. Keep that in mind. Once you master the daily bias, it's time to start practicing the top-down analysis. And what do I mean by top-down analysis? Top-down analysis is basically going to the higher time frames to the lower time frames, taking into consideration the overall hierarchy between those zones. So, for example, let's start doing a top-down analysis here on Euro USD from the weekly time frame. As we analyzed before, we have a weekly bullish order block right here, okay? And I should keep that in my mind. This should be the most important thing I have in my mind when I'm doing top-down analysis. Because of the lower time frames, if I see, for example, on the daily time frame, an order block, a bearish order block, I'm not entering short when price gets here. Because if we get to the daily time frame, we're going to see that there is a bearish order block, all right, on the daily time frame. But if we consider the hierarchy between the time frames, we will get to the conclusion that it's very likely that price will break out this bearish order block because we have a weekly bullish order block backing the bullish idea up. And since it's a higher time frame than the daily time frame, the hierarchy is higher in this relation between those two time frames. So the priority I have to have in my mind is that it will probably respect the weekly bullish order block and just go through or either show a reaction to the bearish order block to then continue moving up. So for example, once I know the hierarchy between the time frames and I know that price is inside a weekly bullish order block, I'm never going to consider taking any sell entry right here because I know that it's very likely that price will reverse around here and actually go into other liquidity levels such as this bearish order block, this other bearish order block, this fair value gap on the daily time frame. Here we have a perfect example on why is the time frame hierarchy important. So let's do a recap what we're looking. So we're looking at a weekly bullish order block right here and a daily bullish order block. So it's very likely that we're going to see a bullish reaction to the upside. And we also have a bearish order block right here. But if we break it down to the 4-hour time frame, we're going to see that price did a nice displacement down to the downside and it created a fair value gap on the 4-hour. Plus, there is an order block right here. But if it wasn't for the higher time frames, this would be looking as a good sell. But since I know that the overall higher time frame narrative is bullish on this area, I have to take into consideration that this fair value gap right here is very likely to be displaced. It's very likely to not be respected because of the overall narrative. So it doesn't matter how good the trade entry looks. It doesn't matter how good the setup looks. It doesn't matter how good the market narrative looks on the lower time frames. If you don't take into consideration the higher time frames, you're very likely to be frustrated because the overall higher time frame idea is respected, but your lower time frame only idea is not. It's very normal that we see that lower time frames level are not respected because of higher time frame levels, and that's hierarchy between the time frames. Keep that in mind. Continuing in this example, I know that it's very likely that this rebel gap will be pierced through and will not trigger any sell entry right here. Of course, this is not an ideal selling scenario because of the overall higher time frame narrative. Let's take a look. Alright, so price tapped into this fair value gap and went straight down until this low right here. But then after that, price started to do a very strong bullish movement. And why is that? Because of the higher time frame narrative. So now to close this topic, it's very important to know that when we're talking about top-down analysis, we're talking about taking into consideration the hierarchy between the time frames. So when we have a look at the weekly time frame, this has the highest priority of information. When we go down to the lowest time frames, we want to make sure that our lower time frame ideas are aligned with our higher time frames ideas.
because the probabilities of we having success with them are going to be very higher. So the next step, and I think this is a step that people usually skip, is actually writing down all the non-chart related aspects that you need to take into consideration when you're backtesting. These aspects should be very similar to your live trading parameters. For me, for example, I want to have it very clear the time of the day that I am trading. I specifically trade the New York kill zone, the ICT New York kill zone, and that kill zone is specifically defined by 7 a.m. New York local time to 10 a.m. New York local time. So if I'm backtesting, I'm only going to consider entries between that time window. Sometimes I do consider, I don't know, 10 or 20 minutes after, but that means that a setup was already formed before the kill zone actually ended. So you should keep in mind and type down what time of the day you're actually going to trade on your live account so that you can replicate those parameters into your backtesting data. Another very important aspect is news. There are some topics that I like to highlight regarding news. I always validate the whole news week calendar before actually considering to do any type of backtesting because there are some high impact news that I stopped trading on my live account one day before. So not actually on the actual news release date, but for example, on NFP, I stopped trading one day before the NFP. Regarding news, this is very important, guys. We have to know, for example, do we trade news? Are you going to trade news? Are you going to take into consideration trading news under backtesting? Because that should reflect what you're going to actually do on your live account trading. So, do you trade news? What type of news do you trade? And what type of news you don't trade? What type of news is a don't look for any setup on this day type of news? What is your approach to high impact news? Do you stop trading? Me personally, I stop trading 10 minutes before every high impact news. But of course, if it's NFB, CPI, PPI, and FOMC, I'm very likely to not be trading on that day and maybe the day before that. Which also brings us to the topic, what is your approach to those widely known as very high impact news, just like NFP, CPI, FOMC, and so on? What do you do about them? Last but not least, regarding news, we have to also be aware in the charts of when the market is starting to expect those kind of news. And sometimes we can see that in price action. So we can basically have a seek and destroy days, and we should also have that into consideration. And now regarding bank holidays. So what bank holidays you don't consider trading at all? For me personally, when it's USD bank holiday, I don't trade because I'm trading Euro USD. If it's German or Italian, maybe French holiday, I may also be extra careful when taking any trades or maybe reduce my risk. All those answers you should have very clear in your mind when you're going to define what are the parameters on your backtesting. And those parameters should reflect your live trading actual parameters. Otherwise, the backtesting data will not be useful at all. The next topic is, what type of trade are you looking for? See, it's very hard to know what you're going to do in the marketplace if you don't know exactly what you're looking for, especially what you're not looking for in the marketplace. And this is very important because this actually helps preventing FOMO trading and actually taking trades that are not according to your trading plan. And this usually means that you don't have a clear trading plan. And this is a problem you have to tackle. You consider taking trades when the top down analysis market narrative is not good enough, or at least it's not high probability. What does a high probability trade look like? How does a high probability day looks like? How much confluence do you need to consider taking any trade idea? How many factors do you need to not be interested in a trade idea anymore? And what are those factors? Do you take partials? Where do you take them? What do you do when a high impact news is coming and you're already in the marketplace trading with an open position? Do you take one more partial? Do you reduce your stop loss? What do you do? Do you just see what happens? You have to have it very clear. While you are on a trade, what makes you forget the trade idea, meaning closing the trade? What pair do you trade? What assets do you trade? And what assets are related to your chosen asset? So for me, for example, we have Euro USD and we have DXY, which is related to Euro USD because it's the dollar index. As you guys can see, those are lots of factors, lots of things you have to get in mind, lots of answers you have to answer to yourself before you're actually going to produce useful backtesting data. Once all those topics are very crystal clear in your mind, I consider that you're ready to create good backtesting data. Regarding the backtesting topic, that's it. I hope you guys enjoyed it. Please, if you like the video, like down below. If you like the channel's content, please consider subscribing to it. If you have any questions, just comment down below and I'll answer all of them. And if you have any feedback, I'm very open to feedback, of course, constructive feedback. Leave it down below and I'll have a look and just answer to you guys. Let's do it. All right. So thank you very much for watching. I hope you enjoyed it and stay safe. Bye.